Hey, crypto fam. It's November 5th, 2024 election day here in the US. And the crypto market is really feeling it today. We're seeing some crazy movement, so we're going to break it all down for you. What do you need to know to navigate this volatile landscape? Bitcoin's been on a wild ride, Dogecoin's ignoring the dip, and we've got that election outcome looming over everything. Let's dive in.
Yeah, the global crypto market cap is down just slightly, less than 0.5%, sitting at $2.24 trillion. But what's really interesting is what's happening beneath the surface. Some individual coins are showing some surprising strength.
Okay, let's unpack that. What are we seeing with the big players, like Bitcoin and Ethereum? I'm seeing red across the board on my portfolio.
Bitcoin is down just a fraction, around 0.32%, hovering around $68,648. And Ethereum is feeling it a bit more, down 1.51% at $2,429. Not a major bloodbath, but definitely some pre-election jitters in the air. The Fear and Greed Index is sitting right at 50 neutral territory.
Neutral, huh? Well, it sure didn't feel neutral last week when Bitcoin took that 8% tumble. That dip below $69,000 was pretty dramatic.
It definitely shook things up. Remember that massive liquidation event on November 3rd? Over $350 million wiped out. That's a record for this year. That $69,000 mark was a key support level for Bitcoin. And when it cracked, it triggered a wave of sell-offs.
Ouch. That's gotta hurt. So how much of this volatility can we blame on election anxiety?
It's tough to say for sure, but the timing is definitely interesting. There's been a lot of speculation about how the election outcome will impact the crypto market.
Well, speaking of interesting timing, let's talk about Dogecoin. It seems to be defying gravity while everything else is dipping. Doge is up over 10%. What's fueling that surge?
Dogecoin is definitely the outlier today, up a whopping 10.22%. Few things could be at play here. First, remember Dogecoin thrives on hype. It's the OG meme coin. We've seen a surge in social media chatter about DOGE lately.
Yeah, I've definitely seen Dogecoin trending on Twitter.
Yeah.
You know how it is with meme coins? A viral tweet or two can send the price skyrocketing. It's like their superpower.
Exactly. Plus, there's that added element of pre-election speculation. Some investors might be betting on Dogecoin as a hedge against market volatility. Or maybe they're just hoping for another Elon Musk endorsement.
Makes sense. High risk, high reward, right? It's definitely a gamble, but some people love that wild ride.
And let's be realistic, Dogecoin is inherently volatile. It's a meme coin driven by sentiment and speculation rather than fundamentals. So this kind of price swing isn't entirely unexpected, but for investors, it's a reminder to be cautious with meme coins and understand the risks involved.
Absolutely. Now, switching gears a bit, let's talk about that Mt. Gox news. $2.2 billion worth of Bitcoin on the move. That's a lot of firepower. What's the story there?
It certainly raised some eyebrows. Amidst all the election buzz, this news adds another layer of intrigue to the market. The current theory is that this movement is tied to Mt. Gox creditor repayment.
For those who might not remember, Mt. Gox was a major Bitcoin exchange. That collapsed back in 2014 after a hack. A massive amount of Bitcoin went missing, and creditors have been waiting for reimbursement ever since.
Exactly. So this recent movement could signal that those repayments are finally happening. But here's where it gets interesting. Moving that much Bitcoin at once can impact market liquidity. It's like a whale making a splash in a small pond.
I see. So even though it's related to this old event, it still has the potential to ripple through the market today.
Precisely. And speaking of ripples, we can't ignore those Bitcoin ETF outflows. Almost $580 million called out. That's a pretty clear sign of caution from institutional investors.
So while retail investors might be chasing meme coin pumps, the big players are taking a more cautious approach. Why is that?
Institutional investors tend to be more risk-averse. And with the U.S. election outcome still up in the air, they're likely holding back. They're probably waiting to see how things shake out before making any major moves.
Smart move. It's like they're watching the game from the sidelines, waiting for the right moment to jump in.
Exactly. And it highlights the fact that the crypto market is influenced by more than just price fluctuations and meme coin hype. Global events and political decisions play a significant role, and understanding these connections can be key to making informed investment decisions.
I like that crypto is part of a bigger picture. So we've got election uncertainty, meme coin defying gravity, and institutional investors playing it safe. What a day. What else is happening out there in the cryptoverse that our listeners need to know about?
Well, there's been an interesting development on the regulatory front. Bitpanda, a European crypto exchange, has adopted the Eventus Validus platform for trade surveillance. This might seem like a small detail, but it actually signals a broader trend in the crypto world.
Okay, I'm all ears. Tell me more.
Bitpanda is known for being a pretty reputable exchange, and their adoption of Eventus Validus, a platform with a strong track record in traditional finance, suggests they're serious about security and preventing market manipulation. It's a proactive move that could boost their credibility, especially in the eyes of regulators.
So they're trying to build trust and legitimacy by showing they're playing by the rules. That's a smart move, especially as the crypto industry faces increasing scrutiny from regulators.
Precisely. And it highlights a bigger question that we need to consider. Regardless of who wins the election today, what kind of impact will increased crypto regulation have on the market? Will it stifle innovation, or will it ultimately lead to greater stability and adoption?
Those are some big questions, and definitely something for our listeners to ponder. It's a reminder that the crypto world is evolving rapidly, and staying informed is more important than ever.
It's a fascinating time to be in the crypto space, that's for sure. Yeah. We've got these macro trends like the potential for increased regulation clashing with micro trends like the rise of meme coins. It makes for a pretty unpredictable landscape.
Unpredictable is an understatement. So with all this in mind, what's your take on the connection between the election and Bitcoin's volatility?
Well, it's important to note that Bitcoin has historically shown some sensitivity to major political events, including U.S. elections, for instance. Back in 2016, we saw a notable dip in Bitcoin's price leading up to the election, followed by a surge afterward.
So a little pre-election jitters followed by a relief rally. Sounds familiar.
Exactly. However, it's crucial to remember that past performance isn't necessarily indicative of future results. This time around, there are a lot of unique factors at play. The candidates' stances on crypto, for example, are vastly different. One candidate has hinted at potentially stricter regulations, while the other has expressed more open support for the industry.
Right, and those contrasting views are definitely causing some uncertainty in the market. It's like investors are holding their breath, waiting to see what the future holds for crypto regulation.
That's a great way to put it. And it's not just about the immediate impact on prices. The regulatory landscape can have long-term implications for the entire crypto ecosystem. It can affect everything from innovation to adoption to the overall sentiment toward crypto as an asset class.
Wow, that's a really important point. It's easy to get caught up in the day-to-day price movements, but the bigger picture is crucial for long-term success in the crypto world. So for our listeners who are invested in this space, what are some key things they should be watching for as the election results come in?
First and foremost, pay attention to any statements or policy announcements regarding crypto from the winning candidate. This will give you an early indication of their approach to regulation and what it might mean for your investments.
Okay, so policy announcements are definitely top of the list. What else?
Keep an eye on market sentiment. Watch how major players like Bitcoin and Ethereum react to the election outcome. A sharp price movement in either direction could signal a shift in investor confidence.
So basically, don't panic and make any rash decisions based on the initial market reaction.
Exactly. Remember, the crypto market is known for its volatility. It's important to stay informed, analyze the situation calmly, and make decisions that align with your long-term investment goals.
Solid advice. It's easy to get swept up in the hype, but keeping a level head is key. Now, before we wrap up, I want to circle back to something we touched on earlier, the Mt. Gox situation. It's kind of wild that this event from 2014 is still impacting the market today.
It really speaks to the unique and complex nature of the crypto world. The Mt. Gox hack was a watershed moment for the industry, and it continues to cast a long shadow.
Can you remind our listeners why this event was so significant?
At the time, Mt. Gox was the largest Bitcoin exchange in the world. When it collapsed, it lost a staggering 850,000 Bitcoins worth hundreds of millions of dollars.
Wow, that's a huge amount of Bitcoin. What happened to all those missing coins?
Well, that's part of the mystery. Some of the coins were eventually recovered, but a large portion remains unaccounted for.
So this recent movement of $2.2 billion worth of Bitcoin, is that all part of the recovered funds?
It's believed to be a portion of the recovered funds that are being distributed to creditors who lost their Bitcoin in the hack. It's been a long and arduous process for these creditors, so this movement is seen as a positive step toward resolution.
It's definitely a reminder that patience is a virtue in the crypto world. Sometimes it takes years for things to play out. Speaking of long-term thinking, let's shift gears and talk about the regulatory landscape. We mentioned Bitpanda's move to adopt a more robust trade surveillance platform. Is this a sign of things to come for the industry?
I think it's definitely a trend worth watching. As crypto becomes more mainstream, regulators are naturally going to take a closer look. And for exchanges like Bitpanda, demonstrating a commitment to security and compliance is essential for building trust and attracting institutional investors.
It makes sense. If you want to play in the big leagues, you need to show you're taking the rules seriously. But some people worry that increased regulation could stifle innovation in the crypto space. What are your thoughts on that?
It's a valid concern. Too much regulation can create barriers to entry and slow down progress. However, I believe that clear and balanced regulation can actually benefit the crypto industry in the long run. By establishing clear guidelines and standards, regulation can create a more level playing field, reduce risk, and boost investor confidence. This can ultimately lead to greater adoption and mainstream acceptance of cryptocurrencies.
That's a good point. It's all about finding that sweet spot. Enough regulation to protect investors and ensure market integrity, but not so much that it stifles innovation. It's a delicate balance.
Absolutely. And it's a conversation that's going to continue to evolve as the crypto industry matures.
Well, it sounds like we've got a lot to look forward to in the crypto world. The election results, the regulatory landscape, the ongoing saga of Mt. Gox. It's all part of this exciting and ever-changing journey.
Exactly. It's a reminder that crypto is not just about price charts and technical analysis. It's about understanding the bigger picture, the forces that shape the market, and the potential impact of global events.
So for our listeners who are feeling a little overwhelmed by all this information, what's the one key takeaway you want them to remember?
Stay informed, stay engaged, and don't be afraid to ask questions. The crypto world is complex, but it's also incredibly rewarding for those who are willing to put in the time to learn and understand it.
I love that. It's all about embracing the journey and being part of this incredible evolution of finance. It's fascinating how all these pieces fit together.
Mm.
Retail investors chasing meme coins, institutional investors hedging their bets, and the looming election adding another layer of complexity.
It certainly makes for an interesting landscape, and it highlights why it's so crucial for investors. Whether you're new to crypto or a seasoned veteran, to stay informed and do your own research.
Couldn't agree more. Knowledge is power, especially in the world of crypto. Well, folks, it looks like we've covered a lot of ground today. From Bitcoin's wild ride to Dogecoin's defiance, from Mt. Gox to ETF outflows, and of course, the ever-present election jitters.
It's been a whirlwind day in the crypto markets, and it's a reminder that this space is constantly evolving.
Absolutely. So to our listeners out there, thanks for joining us on this deep dive. Remember, the crypto world is full of opportunities and challenges. Stay curious, stay informed, and most importantly, never stop learning.
And who knows what tomorrow will bring. We'll be here to break it all down for you. Until then, happy investing.
That's right. We'll catch you on the next deep dive.